Okay, we are back. We are live here in Mexico City, day 2 of Bitso's Stablecoin Conference. We're here in the booth, powered by Agora. Shout out to that team. Stabledash Live is sponsored by Agora, built for global institutions moving money at the speed of the internet. You can learn more at agora.finance. And we are here with one of our just original guests of our podcast. Tom, you were one of our first guests on the show over, almost feels like 2 years ago, almost now. We have not caught up since then. So I'm excited to hear about Walapay, what the latest is, but maybe we start off with, co-founder, CEO, what your intro is, and what a little bit about the company high level.
Yeah, for sure. So my name is Tom Borgers. I'm one of the founders of Walapay. We're a company that's been around now for about 2.5 years. And what Walapay does is essentially money movement infrastructure centered around stablecoins, focused especially on moving money in and out of emerging markets for B2B primarily, right? So we deal with a lot of businesses, fintechs, PSPs in regions like LatAm, Africa, Middle East, and APAC as well. And we help them move money, manage money, etc., using stablecoin-based technology.
Cool. Maybe to kick off a little bit of like the stack that you have built, a lot of the audience we have is pretty native in some ways to the industry. How have you, from an infrastructure standpoint, how have you built what you've created? Are there key partners or infrastructure partners in the stack that you're using versus maybe more of these first party proprietary things that you guys would help us maybe we start unpacking the difference there?
Yeah, for sure. I think maybe where I can start is everything that we've built is kind of centered around 2 basic theses. One is that the future of financial services, and certainly cross-border payments, is centered around wallets as the heart of a company's financial operations, and public ledgers as the way that value gets moved around, right? So stable coins being obviously very, very dominant in that framework. So that's number one. And then number two, we really fundamentally believe that if you're going to derive the biggest advantages and benefits out of using stable coins and wallets, you need to own as much of the infrastructure that you're providing to your customers, right? So we have really taken that to heart in the markets that we consider strategic. So those include, especially countries like Mexico, actually, other parts of LatAm and APAC. And we've gone and, tried to get licenses wherever we can. We've built direct relationships with banks, bank partners in, countries like Mexico, the US, et cetera. And then we've built our own liquidity engine on top of that. And then we've connected that infrastructure in both sides of the corridors that we serve to be able to really provide this disintermediated experience for our customers, right? So we try to own as much of the infrastructure as possible so that we're not kind of eroding a lot of the benefits you get from using stablecoins on public ledgers.
Cool.
But then, of course, you're always dealing with partners in the payments world. I think that's still very much a reality. So we work, with companies like Kappa, for instance, for liquidity. Our liquidity engine in every market is based in part on our own liquidity, but obviously we're also pooling in from various different providers that are both crypto native and then not crypto native, right? So we might work with the bank on FX, but we might also work with, a more kind of an OpenFX type liquidity provider. And all of that kind of gets aggregated into our liquidity stack.
The liquidity stacker engine that you're talking about. Yeah. How would you break that down in a playbook? How have you, maybe the first time we got introduced was it the podcast season we did with Defense?
Yeah.
Was that it? Yeah. So is the core infrastructure that on the wallet side, are they still a key part of that, or how are you thinking about that?
Yeah, I think I say we're trying to own as much as we can, but there are certainly parts of the stack where we've clearly said this is not our core competency and we're not going to build our own or roll out our own. That obviously applies to the chain itself. to the bank layer, and then also to the wallet.
Okay.
So in terms of wallets, like today we work with Defense primarily. We also work with Privy, and we may work with other providers because ultimately, we're trying to give options to our customers where we're not kind of building our own tech.
Sure.
Right?
So if they already use Privy or they already use Defense for that decision, does that make integrating or using Walapay that much easier? Like you can kind of have integrations in some ways, or am I thinking about it incorrectly?
Yeah, no, you can bring your own wallet, right? If you have like one of these providers, or you can leverage ours. And there are a few different configurations where you might go like fully self-custodial a la Privy, or work with a more custodial setup.
Okay.
Where we use Defense.
Cool. So it's been a year and a half-ish, I think, since we talked. What are you most proud of that you've built since then? Like where have you been spending your time? It sounds like you're getting licensed in some local regions. You're building some of this like liquidity tech. What are some of these key like proud founder pillars when you think back on the last year and a half that you guys have done? It's a lot of time.
Yeah,
a lot of days.
I mean, I can't tell you how different the company is today than a year and a half ago. But we've made like really big strides from a licensing and banking infrastructure perspective. So I would say I'm most proud of serving the customers that we do today. We have an incredible array of customers that range from folks like Nuvei on the PSP side to more stablecoin neobanks like Kast and Zarpay and Ugly Cash. And so I'm very proud to be serving these customers, which are really bringing the technology into the hands of people in a very tangible way, right? That's kind of more on the results or like outcomes, right? But with respect to the tech that we've been building, I'm really proud of the work that we've done to bring these corridors together, especially across LatAm and APAC, right? This is probably the biggest source of growth for us, and where we've spent the most amount of time making sure that these corridors, for example, Mexico to China or Brazil to Hong Kong, Colombia to Singapore, these kinds of corridors, we've made them very, very easy and streamlined, right? So it's now faster, cheaper, and more transparent to send money across borders in those corridors. And a lot of that has been because of the work we've done to build up our infrastructure on both sides, right? And especially, I would say, in the China-Hong Kong kind of region, we've done a huge amount of work to make sure that we can do this in a compliant way, working with all of the best licensed providers and banking partners over there. So yeah, I think that's enabled a huge shift in kind of what we're able to do and what we're able to bring for these customers.
Yeah. So let's double click on Kast. We love Kast, and they're a proud sponsor of the show, and we've had Rags on, I think, more than any other guest. So dive into maybe how Walapay practically serves a company like them, and maybe the value add in terms of how you guys are providing, like what does that look like, and we can kind of use that as like a case study for a little bit.
Sure. And I'll talk about Kast, but this applies to a lot of other similar kinds of companies that are building in the space. But
like, what problems did they have that you solved?
The range of problems that we see from Kast and some others are typically around getting access to named virtual accounts in USD, Euro, pounds, some of the key kind of G7 currencies, and then connecting that with stablecoin infrastructure that enables on and off ramping in emerging markets, right? I think it's at this point, like it's not particularly difficult to do the more traditional FX corridors like USD to Euro, right? This is not something where stable coins need to come in and disrupt the market, but stable coins definitely can help in emerging markets and moving money across emerging markets, right? So where we're really adding value for customers like Kast is especially in terms of off-ramping from stable coins to local currencies in markets like Pakistan, Egypt, Nigeria, UAE, Colombia, and even more developed markets like Japan, which are, they're very different structurally, but actually they're also, from a regulatory perspective, very, very complex to work with and to do right. So those are the types of markets that we're enabling for folks like Kast and others.
Okay. I'd imagine there's like an evolution of like the users of something like this. Like Kast is an interesting example because they have end users that have a relationship in their mind, whether it's retail users or I think increasingly so businesses who are using Kast. And when they think about moving money and getting these accounts, it's with Kast in their minds.
Yep.
Have you considered the like what it would look like to do the first party kind of direct approach with Walapay, or are you got like similar to Kast, like building something like that where you would actually own or create customer relationships directly, or are you intentionally and strategically remaining under the hood, like like how do you think about that?
Yeah, look, we see ourselves very much as a licensed infrastructure provider, and that's our role in the ecosystem. And we don't want to compete with our customers, right? So we're making a strategic choice to focus on the infrastructure, focus on the licensing, and being an enabler of a lot of these fintechs and PSPs who have the direct relationship with their end users.
But I feel like we're starting to see, at least from our perspective, more and more of those types of companies want their own licensing and want to do. It's just like an interesting consideration of like, I don't know if Kast is in this camp, but just like companies who like them are wanting to also say what you're saying, like have the licensing and relationships and not have the counterparties that they need to orchestrate and do all that stuff. Like, and then on the other side of the coin, we're also hearing people under the stack across. This is not just specific to you guys. There's something we hear is like, what does it look like to go direct and like own the relationship and the differences there? And it seems like an interesting evolution. Or like, how are you thinking about that?
Yeah, I think it's funny because like in the long run, we're almost all kind of going to be competing and overlapping on the various different things that we do, but we don't live in the long run, right? And I think what we've seen is for sure there will be apps like Kast and others that will go and get their own licenses in certain markets, and power to them for that. There's absolutely no issue from our perspective with that. But fundamentally, when you're serving end users versus serving a fintech as an infrastructure provider, you have kind of different constraints and different priorities that come up, right? Very naturally. And we think that we're better served focusing on the challenges that come with getting a license, but even more importantly, maintaining these licenses and these relationships with bank partners. And we've seen this firsthand, right? Like both from our own experience building with these bank partners and so on, but also building, in the past on top of other infrastructure providers who will not be named here, but who have had their own issues and, made it very clear to us that if we're going to do this well and reliably over the long run, we need to pick our battles and we need to pick our focus. And our focus is on the license infrastructure.
Yep. What is so difficult about this, and what have you learned in the journey of the challenges that are faced with maintaining these relationships and getting them to begin with? It does seem like a unique focus versus what maybe a platform like a neobank or a fintech specifically, which in my view is way more on the customer acquisition, go to market, specific brand. Like that's a very different focus than what you guys are building. So what would you say is like the most misunderstood or underappreciated part of what you're seeing?
Well, first, I think you got that exactly right. Like you hit the nail on the head. And at the risk of putting your listeners to sleep here, I think like compliance is the most underappreciated thing in our industry. And I think if you're not like investing a huge amount in building your compliance program and again, maintaining and growing it, then you're going to hit a point at which your growth kind of goes head to head with what your bank partners and your regulators are basically comfortable with, right? It's going to come to a head, and it's going to be very ugly. And again, we've seen that with some of our early infrastructure partners, and we've taken those lessons and really built out a program that we think can scale. And that actually, one of the things that we did very differently early on is A, invest heavily in compliance, but B, build compliance like directly into the product in a way that can be a little bit more automated. Obviously, AI helps a ton in this respect, but in a way that like really enables it to scale with the number of our customers and their underlying end users. And like you said, like this kind of focus and what it takes to get that right at scale across different jurisdictions from a regulatory perspective, it's a totally different set of like capabilities you have to build versus the one that you talked about, which is like building up this customer acquisition engine for end users. Yep. Right? Super different.
Talk a little bit about when we were outside, you were excited about some like specific fixed income products and like what that means. What did you mean? What are you excited about there? What are you looking into with that?
Yeah, so I think another big change over the last like year and a half is that we've evolved a little bit from being kind of purely focused on payments to now being this infrastructure provider across different parts of the financial services like value chain.
Sure.
Say, right.
So historically, that's like moving in and out of fiat to stablecoins, but there's more to that reliance that you're realizing that you can deliver.
100%.
Interesting.
Okay. And it's our customers are asking us for these other products, right? So we've moved essentially from really a money movement company to a money movement and management company.
Interesting.
And so that means like money in and out in terms of on ramps, off ramps, fiat to fiat, stablecoin to stablecoin, to now adding treasury products that are on chain. And we think like this idea of being able to bring on-chain tokenized products to the world is super powerful. And again, it's the same set of customers that are asking us for this. And so we started this, actually, we worked with folks like Agora and Brale and others to do yield, or maybe I should say reward-bearing stable coins that we can issue for our customers. And over time, we've started to expand on that initial kind of product to include other fixed income, tokenized products. We're also, looking at like money market funds, and then also, hopefully bringing in tokenized equities, tokenized funds, and things like that over time that our customers can deliver to their end users either as distinct instruments or as strategies that come in the form of a vault, right?
Okay.
And you guys are super familiar with the Etherfuse team. We haven't worked with them yet, but we're super big fans of what they're doing to bring these kinds of like bonds on chain.
I think this is airing right after the chat with Dave. So
yes, exactly.
That's great.
So inspired by that.
So in that reality, like, well, one, I want to ask about AUSD and like what that means, but with this, how would you in theory work with Etherfuse? They would be able to kind of bring access to specific fiat markets and maybe bonds or yields from those assets natively into this like fixed product, fixed income product.
Like I guess in some ways you can see it as Etherfuse can bring Walapay to their customers, and Walapay can bring Etherfuse to our customers. So in the latter format, we would basically give access to our customers to Etherfuse.
These stable bonds could be living and kind of embedded.
Exactly.
Okay.
And like completely abstracting the interface of having to like get stable coins or crypto moving into these tokenized bonds, moving out, well, you could say like that complexity, hopefully it's getting less and less complex over time, but from the point of view of some of our Web 2 customers or like non-crypto native customers, abstracting a lot of that interface is what we're able to do through our API infrastructure. And then it's really just a matter of like swapping from any currency to these kinds of products and then back to any currency. And when I say any currency, I mean both stablecoins and fiat currencies.
Really, really interesting. How do you, like when you're thinking about the work with Agora, what was the consideration of what was attractive about working with them, or how did you, like, why did it make sense to bring AUSD into this part of the stack? What did that look like?
Yeah, I think again, here as a infrastructure provider, we're trying to be fairly agnostic in terms of like the different infrastructure providers that we work with, but we love the Agora team first and foremost. Super strong team with a great track record, and the approach that they took to get Agora and AUSD off the ground really appealed to us, and just the way that it's easy to work with them and so on made it really attractive as one of our first partners. And then over time, we also started working with a few others as well. But it's a very, in a way, we are moving. We're essentially targeting a certain outcome with our clients, which is being able to swap in and out of treasury products instantly from and to any currency. That is an extremely powerful thing, right? It just doesn't exist in the incumbent kind of banking landscape, right? So we're trying to move backward from that, and companies like Agora and what they're doing with AUSD are like very very straightforward ways of getting to that.
Yeah. Any other like companies in the stack or partners that you want to give flowers to, or like just companies that are building and any ones that you just feel like are core pieces to this working that?
Yeah, look, I'll give another shout out to our friends at Kappa. I think they're doing amazing stuff on the Mexico side.
And this is the liquidity engine piece. So what does that mean? How do you work with them?
So essentially, what Kappa does is they're enabling this seamless liquidity between MXN and stablecoins, right? And so they're one of our liquidity providers for that, and they just fit right into our liquidity engine there, and they enable us to serve the market in Mexico.
And so there could, in theory, be like Kappa players for all of the markets that you're trying to go after. Are there similar companies in other countries or regions that are taking similar approaches?
Yeah, for sure. I mean, look, in Brazil, we work with folks like Avenida and BlindPay, who both do a great job. In countries like Nigeria, we work very closely with JuicyWay, who's we think one of the better or perhaps the best liquidity provider in that market. And we've really built this out across like all the markets that we serve, right? So it's going to be a similar kind of structure in the various different markets, with the caveat that there are still some markets that are from a legal regulatory perspective not super easy to serve with stablecoins specifically. So in some markets we have to kind of work on a purely fiat basis and then work offshore to make conversions essentially between fiat and stablecoins. But that's all part of the underlying infrastructure and the magic of basically being able to deliver this without our customers having to deal with the friction and complexity that comes with that.
Okay, we got to wrap here.
Yes,
dude. I know we're like we're in the weeds of this.
Keep going all day.
Give me one last question. Like, what we have a chat a year and a half from now?
No.
Hopefully it doesn't take that long. But what is the main focus for you as like co-founder? What is strategically top of mind, like number one priority from now as you think ahead into the future to continue to win? Like, what does that mean for you guys?
Look, we're expanding in two ways. One is horizontally in terms of our financial service products. So can't say too much, but we're definitely not stopping with payments and treasury. There's a lot more coming down the pike from that perspective. And then we're expanding also from a geo perspective, adding more and more banking partners in different parts of the world. We've acquired a few licenses that we haven't yet announced, but that will become part of our licensing stack. And really our goal is to get to that vision that I talked about earlier, where all of financial services are basically built around wallets and public ledgers with stablecoins really at the heart of that, right? We think there's some amazing companies that have taken this, the early steps on the road to that vision, but we're definitely not there yet, right? And so we're very much looking forward to get there. We think it's going to take a few years, but that's what we're all about.
Yeah, building a network takes some time. Well,
100%.
thank you for the time. It's always a pleasure.
Thanks so
and
much.
we'll do it again soon.
I hope so.
Yeah, man.
Thanks.
We're going to take a quick break. That was our live conversation with Tom from Walapay. We will be right back. We're watching Stabledash live. We're in Mexico City. We'll keep it going.